Hello from the Dukascopy TV studio in Geneva. What is Finance 2.0 and why does Swiss banking have to move on with being more competitive? I will ask these questions to Marc Lussy. He is from Marc Lussy Innovation. Welcome to the studio.
Thank you very much for having me.
So everybody is talking about Fintech in Switzerland, and now we have this Finance 2.0. What is the difference, Marc?
Well, basically, there's even like a third word which is used. It's digitization, and there's Fintech and there's Finance 2.0, and usually they're all used in the same way. So basically, basically people use that word and the other word, and basically they mean the same. And we should really differentiate what it means, because basically digitization, that is just like taking the data from the physical area into the digital area, and that basically started like back somewhere in 1980 or something like that. So that's nothing new at all, and the digitization really moved ahead really fast, and it will move faster in the future, that's clear, but that's nothing new. Then we have Fintech, and basically there we talk about just the functionality. It's just IT functionality. That's basically Fintech. The functionality is in the center, and still there, for some people, that is just a company who does IT and works in the financial sector or provides IT for the financial sector. And that basically is not new either, because we had that like a portfolio management solution that basically, if you define it like that, is also Fintech. So I also differentiate there as well. Basically, I say, if you really want to call it Fintech, either it must be disruption, so it's really something totally new which was not possible before. You can take the example of Mobino in the payment area, payment app, or Klimper, same story, because there you can upload your money on the mobile, on your smartphone, and basically you don't need a bank yourself, you don't need a bank account, you don't need a credit card, nothing else. So basically that was not possible before, so that's a disruption. And the second one would be something, it's Fintech if it's tremendously cheaper, much cheaper than everything else that existed before. One would be like Robinhood, only exists in the States. As far as I know, there you can buy stocks and bonds for free. So that's significantly cheaper. And then the third one is, which I call Fintech, if you can compare something which was not possible to compare before, or where you can increase transparency. One would be like Wikifolio, where you can really compare the number of trader according to a certain criterion, or even that would be the Performance Corner, where you as a client can load up your portfolio and compare it to a number of other real portfolios, and you can compare it risk adjusted. So that's really a comparison which so far is not possible, was not possible. You cannot compare to some real portfolios of other clients. And then we go to Finance 2.0, and basically that is where I think the real success lies. And that is where you really have a focus on the process. So I'll make an example, like a well-known process is the investment process. So you as a client, you come to me as a bank, you start with the onboarding, then we do the risk profiling, then based on the risk profile, we put together your product, and then we implement that product or the purchase of these products. Then we control it, then we have the performance calculation, and so on and so forth. So that's the whole process. So basically Finance 2.0 means now I really look at the whole process, and I say like, okay, here we could improve by using the solution of that company, of that Fintech company, maybe for risk profiling. But you as a client, you don't only want risk profiling, you want also the other stuff. So there, I might decide, if I look at the process, well, this area, I don't need a tech solution. I rather use the portfolio manager or relationship manager who does really that as a person without using any technical, big technical help. So basically that should be together. So these processes have to work like with humans and with the technology, and that should work really hand in hand, which very often now doesn't happen. So the relationship manager is still the old way, and then you have some technology, and that somehow doesn't fit together. So basically what I'm saying is Finance 2.0 is just a process to provide a new service, and that doesn't necessarily mean that we only use technology. So basically, just a new way of service. I put human workforce together, and of course, a lot of technology, but not only technology. It's just like a new way to provide new benefits, a better way to clients to serve the client better.
Mm-hmm. And so the common sense in Switzerland is that Switzerland is lagging behind in this digitalization of the processes in Swiss banking. So how can this backlog be overcome?
Well, basically, all the players, they have to put away their ego. So basically, the egos, I think we still make too much money in Switzerland. So the egos, to me, seem to be too big. And we have kind of like three parties. We have the banks, we have the fintechs, and then we have the politicians and the authorities. So basically, to me, politicians and authorities, they do not care too much, so there's not so much or not really a lot of Finance 2.0 know-how there. Although we have elections soon, that maybe would be a topic to really gain some voters, so nobody cares so far. So yeah, they also should start to care about that and put away their ego and look to the future. And then obviously banks, they really have to embrace the fintechs. So sometimes they say they embrace, but they with their heart, they don't. So they should really be very open towards fintechs. They should really put them on the same level. So they should not be like, we're the kings and like, yeah, the fintechs, yeah, you're there too. So really on the same level. But that goes also for the fintechs, because sometimes I have the feeling fintechs say like, yeah, we have a new way and we disrupt banking and we take the business away from banking. That's not what it's about. It's about to give a better service to the client, and very much probable it has to go together with the know-how the banks have. And then we have like, and also we should, like the banks and the fintechs, they should embrace the politicians and the authorities as well. And of course, the authorities should build up know-how. And last but not least, one thing really disturbed me quite a lot, and still don't understand it. We have now in the authorities, we have a advisory board for banking and maybe even for fintech, Finance 2.0. And if you look who is there, so it's headed by Professor Brunetti. It's a great guy. And then you have all the big bankers, just like Mr. Odier and so on and so forth. And basically a big thing would be Finance 2.0. And those guys are great guys, have a lot of experience, but not in that area. So the bottom line is basically, in order to really go ahead, we should stop to really try to solve the same old problems with the same old people and expect new results.
So who actually has an advantage? Small banks, because they have less structures that they have to care about, less processes?
Basically yes, yeah. And let me come up with one great example, because the thing is, sometimes I get half sick when I look what the big banks, especially UBS, is doing. It's great what they're doing, but that costs tremendous amounts of money. And like if you invest a lot of money, the more you invest, the higher the costs are, the less probable is that the business case will work. And I'm a bit afraid that at a certain point of time, UBS might say like, okay, we spend like millions and millions, and that is the return. And then they just say, okay, that's the end of the story. I mean, not the end of the story, but they will really slow down. But you don't even need to spend a lot of money. And really a great example I'm really excited about this is the rather little bank, Lana Kantonalbank, you know, because they really came up with, and that didn't cost a fortune, they came up with the robo-advisory, if you will, or with the digital advisory, with their Investomat. Great, that didn't cost a fortune, and they really tried, and basically they're really cautious because basically that's killing their margin, right? Because they, on the other hand, they have their mandates where they have much higher fees on it, and now they take the risk and they come with something new because that's a need of certain clients. And then they have the Hippomat, so where you can like have online credits and so on and so forth. That's great, and lately they just came out with like using a new channel, so now they use WhatsApp to communicate with their clients. It's great, you know, little things, and the big difference there is, compared to UBS, the CEO is behind it, you know. That's where it starts. Basically, that should be part of the strategy. The big guy should be in the boat. So that there you exactly see it coming from somewhere where actually I didn't expect it. And they're really, really doing great. And part of it might work, a part of it maybe not, but they don't spend a fortune, and they can also try something new, something else. So excellent example. So
best practices and new solutions are out there. You just have to look for it. Thank you very much, Marc, Lussy, for this interview on Finance 2.0.
My pleasure. Thank you.
And thanks for watching. Do make sure to keep clicking back on the Dukascopy TV website for latest updates and exclusive interviews. Have a great day and see you next time.